S&P 500 Index SPX, long-term, chart analysis, a comprehensive review. Last week's performance, a strong rally. In only 3.5 trading days, the S&P 500 Index, SPX, rallied plus 1.95%. The trend remained strongly to the upside, highlighting the bullish sentiment in the market. This week's analysis, continued gains and bullish signals. S&P 500 Index, SPX, rallied. This week, the S&P 500 Index, SPX, rallied plus 0.87%, further solidifying its upward trend. The Advance-Decline Line, AD line, for the NYSE reached a new all-time high, which is a very bullish indicator for the long term. NYSE Advance-Decline Line breakout. The serious problem we discussed last week, where the market breadth was not supporting the rally, was resolved. The NYSE Advance-Decline Line showed a powerful advance and broke out to new highs. This development is crucial, as it suggests that the rally is now supported by a wider range of stocks. Strategic insights, conservative versus aggressive approaches. Conservative S&P 500 strategy. The conservative S&P 500 strategy is designed to protect investors from bear markets. Short-term declines are endured and should not trigger sell signals. This strategy is based on long-term chart analysis and does not make changes based on emotions, news events, or short-term market fluctuations. Aggressive bull and bear report. The aggressive bull and bear report follows short-term indicators in more detail. This approach is more responsive to market changes and aims to capitalize on short-term movements. Current market position. We are in a bullish position in the RIDEX S&P 500 Nova Fund, RYNVX, or other S&P 500 index funds or ETFs such as SPY. Key catalysts, Consumer Price Index and Fed Insights. Declining Consumer Price Index, CPI. The catalyst for the recent buying spree was a declining Consumer Price Index, CPI, which fueled expectations for near-term rate cuts by the Federal Reserve. Fed Insights. Chicago Fed President Austin Goolsbee. Goolsbee expressed confidence that the price level is moving back toward a 2% annual rate of inflation, citing declining housing inflation. San Francisco Fed President Mary Daly. Daly indicated that recent data on employment, inflation, and GDP growth might warrant policy adjustments, including potential rate cuts. Market trends and predictions. Ed Yardeni's perspective. Ed Yardeni suggests that this slow-motion melt-up has further to run, potentially reaching the 6,000 SPX target for 2025. Market-moving economic reports. Consumer inflation expectations. U.S. consumer inflation expectations for the year ahead fell for a second consecutive month to 3% in June, from 3.2% in May. Federal Reserve stance. Chair Powell reinforced that the Fed does not expect it will be appropriate to reduce interest rates until there is greater confidence that inflation is moving sustainably toward 2%. U.S. 10-year Treasury note yield. The U.S. 10-year Treasury note yield edged above 4.3% on Tuesday, reflecting market speculation on the timing and extent of potential monetary loosening by the Federal Reserve. Mortgage applications. Mortgage applications in the U.S. eased by 0.2% in the first week of July, as the average rate on 30-year mortgages held at the 7% threshold for a second consecutive week. Conclusion: bullish outlook. The SPX position in this strategy remains bullish. Aggressive traders should consider positions in the RIDEX Nova S&P 500 Fund RYNVX or other bullish S&P 500 index funds or ETFs such as SPY.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.